Hi, today is Wednesday, the 5th of January, about 4 a.m. Eastern, and this is the SPX Outlook for the next few days. I will try and update on the weekend or early next week. As you can see here on this 4-hour chart, there's a huge fighting around these levels. There's a gamma wall on 4800, 4825, and there's a lot of fighting here. And the fighting, last week was okay, low volume, festive season, and it looks like even bots were on holiday. So what we've seen is that we had the market reopening 3rd of Jan, a little bit of a drop to this minor support, close to bullish resilience, which is the first 23% fib. Then the market shot up on Monday, and it was mostly Tesla rising to the moon after announcing record sales, and it probably deferred the drifting down or fall, we could say, yesterday. And today the market will be hesitant at least until FOMC minutes are released. I don't anticipate much happening on an FOMC. I think the core of the news have been released and posted, commented over the last 3 weeks. So let's see about the internal dynamics of the market. The market is probably bound to go down at some point, and that would follow the drop on NDX. This is the 1-hour chart, but I could actually back on 4 hours. We had a downward channel forming. This is the techs going higher because Apple had a good down Monday and Tesla also. And yesterday the market dropped because the techs, some profit taking on Tesla, Apple also going down a bit, and we are now on the fib and pivot level. And I would assume this is a pretty strong support level. I would assume the market will stick to the channel and probably hover, unless of course there's something fishy in the minutes, but I don't anticipate much happening here. Market should actually hover around here. If it drops, we have those key levels, fibs, and when the fib coincide with my support lines, this one is pretty strong. So I would say just south of 16,000, there should be a good support. What we've seen yesterday is actually the blue chips were in demand. Now the Dow Jones went further up and broke new highs. It's now probably overextended over the strong resistance. Although we could say that this dip around lunchtime yesterday could have been a test for support. So we will see whether the Dow can still go higher. It's still possible. I would anticipate the market to just hover around the same level after a remarkable rise like SPX. What we see also, and if I now go to the FANG plus Tesla, that the 5,000 level was rejected 3 times, and this time, although there's not much selling pressure here, the market could still, the techs are the new blue chips, and the techs could actually stay pretty resilient for a while. And I would look at a reversal of the FANGs plus Tesla dip below the pivot level to aim for, I would say, 20th of December lows. But I don't expect the market to really go radically down. Having said that, we see that if I look at the ratio QQQ over IWM, so growth over value, there has been some shift, and this in this new year, there's probably a shift towards value. The Russell didn't go up yesterday. It was mostly blue chips, so it's probably a trip to safety. We will see, because the techs still have some good strength. So they are overbought. It's normal for the market to pause at these levels, but and we see that this is a strong support on this ratio. So yes, over the next few weeks and months, there probably will be a shift to value, but at the moment, and also because there's so much money floating around, there's no much need to sell techs to buy value. So at the moment, it's still pretty much undecisive, but the trend is showing. If we look at rates, we had a surprise. This support level on the 2-year, 10-year spread was penetrated. There was a change in the benchmarks. So the trading on this spread has changed a little bit. But overall, we see that the tension on rates has abated, and this could mean that the market is not anticipating more than 2 to 3 rate hikes this year. Basically, it's like everything has been said, it's been priced in, and there's not much surprise expected over the next few days or weeks. So I would say the tension is not that strong. If we look at the VIX as a gauge for concern or fear, we had a bottom around 16. This true bottom is actually much lower. but I would say that this trading range shows a support level around here. The market has failed to reach 1875, where I would say if this one breaks, yes, the fear factor will probably come back and then the market would fall. We've got a very good anti-correlation between SPX and VIX. So at the moment, VIX is okay. It's actually still a good time to sell VIX. It's probably more timing sensitive than it was before, when VIX was just pretty high and you could actually sell vol almost any time. We know that in the last few years, the VIX doesn't stay high very long. The clustering, as expressed in a Gotch study of volatility, in the last 10 years, 15 years, there was clustering, basically resilience on the volatility. Now when VIX pops, it just deflates very quickly. So I would suspect that the VIX will probably keep to these levels, and I'm going to put this support around here. So again, the alert level on the VIX popping hard would be 1875, basically going to the upper part of this range. So now I'm not even going to look at the daily chart. So let's look at the 1 hour chart here. We've got a strong resistance around 48.45. This level here, this dotted lines, is a stall level, which is usually more prevalent, more valid after a strong rise, and that's exactly what happened. So we have a trading range situation. Looking at what happened yesterday, it will very much depend on the Nasdaq holding this support level and this channel to see. I mean, if this one goes, at least holds this support, maybe goes to the channel high again, and the Dow Jones doesn't go into any profit taking, then we will see SPX stay to this range. So I would say we have a clear pivot level here for 765 that was tested for support a couple of times, and the range has been contracted, and I don't see the market going below 46.90 in the short term. I would say same trading range. If the techs fail, then market could actually fall to this level, but otherwise it's going to be pretty much uneventful for the next day or two. We have the gamma wall on 4800. It's still valid, although a lot of it expired on the quarterly expiration last Friday, but it looks like dealers and market makers are protecting this level. So the chances of the market pushing much higher is also limited. Okay, that is it for now. This is actually pretty long. My usual recordings are about 5 to 6 minutes, and so I better stop here. As usual, more updates and more precise information on the Slack channel. Thank you for watching, and bye for now.